A confirmation of conveyance. Can you discuss a little bit about the confirmation of conveyance that we request on our prelim?
Oh, sure. So in uninsured deed scenarios, is that what we're referring to?
Mm-hmm.
Okay. So in title insurance, we verify the validity of every transfer that has led up to our transaction. Because we know that when an individual takes a document to the Hall of Records to be recorded, those friends and family deeds that I was referring to, when a friend or family member owns property and they want to transfer their interest or a portion of their interest to someone else, they will have that document recorded. And what we have to keep in mind is the Hall of Records, when they record a document, they're looking for recordability. So what does that mean? So recordability at the Hall of Records, they're looking to make sure all the blanks are filled in the document, the grant deed, or let's say if I owned property and I was transferring it to Lisa, and I had a deed drawn and I'm recording it at the Hall of Records, because that's our system, is to put it in public record, right? Well, the Hall of Records, they'll record it after they review it to make sure all the blanks are filled in, that it's signed, it's got a live signature, there's a way to mail it back, there's a mailing address on the top left section, and that the notary is clear, legible, and has signed. The notary has signed. So that's what they're looking for. The Hall of Records, to put a document of record, they're looking specifically for recordability. Now the problem is that even though they're checking to make sure all the blanks are filled in, they have no way of knowing if what's filled in is accurate. It could have a wrong lot number, track number, legal description, APN. It could have an incorrect seller's name, grantor's name. Any of that information could be incorrect. They wouldn't know because that's not their part in the transaction. They don't have record keeping that they're comparing it to. They're just there to record it. They're the Hall of Records. They're there to record. As well, the document could be forged. They would never know. They're not trained to check for forgery. So that's not their part in the transaction. It's their part just simply to record, or as a service holder, I should say. It's their part to record the document. So keep in mind, if they're only recording and only checking for recordability, when we get the chance to insure a transaction after those friends and family deeds are recorded, we're the first to verify the validity of the document. We're the very first to verify the validity of that document, to check for things like forgery, fraud, and accuracy. Often, again, legal descriptions are incorrect and documents have to be re-recorded in order to proceed. That happens sometimes. As well, on occasion, we have a forgery in California, LA, Orange County, Southern California. We have some real estate fraud here. So we are trained in title insurance to check for forgery. We're trained for that. We're trained to check for fraud. And so in going through that process of checking for forgery, fraud, and accuracy, if we see a deed where it was uninsured, just between friends and family, that we know was recorded at the Hall of Records and we know they only check for recordability, then we are tasked, or actually, hired in the transaction to check to make sure that those deeds leading up to our transactions were valid. And so the way that we go about doing that, if there's been a transfer that wasn't insured between friends and family, whoever came off title, we have them sign what's called a confirmation of conveyance. It's their opportunity to say, yes, I really did convey it. I really have no interest in the property. It really was my signature. And I have no off-record agreement for money due. Or that's their opportunity to tell us, yes, I deeded to them, but I'm due $20,000 or $50,000 when they sell. And we've had that happen a few times. So it's a great opportunity for them not only to confirm that it really was them, it gives us a signature sample to compare to the deed. We're checking for forgery again. But also, it is their chance to tell us if they have any interest that's off record that we don't see. So that's why we ask for the confirmation of conveyance. We want to make sure it was them that transferred it and that there's no off-record agreement. But in addition to that, remember, anybody that holds title to property, even if you deed off title, there are creditors that could have rights. What if I deeded to Lisa and I had a child support judgment that recorded before I deeded to her? Do you know that she would take that title then subject to my child support? And if she were to go sell the property later, my judgment would have to be paid through her proceeds. Because there was no title insurance, it was just a friendly deed between us with no insurance. Nobody's checked for creditors' rights either, right? So that's another thing that we have to do whenever there's been an uninsured deed between friends and family, whoever came off. we have to check their creditors or for their creditors, because those creditors have rights. If they recorded a lien or judgment prior to the transfer, they must be considered. So does that answer that question? Yes, beautiful. Okay, so let's get into a few coverages. Now, this sheet here that we're going to be looking at is part of the buyer and seller guide. So I want you all to know that we'll make sure that you have that buyer and seller guide. You can look at this at your leisure and really go through the different coverages, but I want to cover at least 5 of the common coverages that they all have, and then something that's unique about each policy in addition. So this first row that we see here is the CLTA policy. I referred to that earlier. The CLTA policy is the basic coverage policy. Again, typically that sort of policy is given to a buyer of vacant land, usually. The ALTA residential, that second row there, ALTA residential policy, that was historically our policy that was issued for many decades to buyers in California. And it is an extended coverage policy, but doesn't have nearly the coverage that the last row, the ALTA homeowners policy, now has. So the ALTA homeowners policy is our most recent policy in title insurance. It has additional coverages we'll touch on. And that would be the policy that is our go-to to issue to a buyer if their property qualifies for it, which in most cases in California, they would. So that would be typically what we would be issuing in California. Let's go over a couple of the common coverages that they all three have. Item number 1 and item number 3. Let's start with those. So item number 1, they all have, which is someone else owns an interest in your title. So let's say we have a seller sells a property, we insure a new buyer, and it turns out that that seller got the property 50 years ago from somebody else that had a percentage, but didn't get another percentage that another owner had. And so a portion of the percentage wasn't included for some reason, and the person that didn't transfer files a claim. We would be covered. We would be covering that. We would certainly protect a buyer from any previous owner's interest that they have in the property. That's one of the first and foremost coverages in title insurance, is that you have clear title. No one else has an ownership or an interest in that property. Now, item number 3, they all have as well, and that includes the coverage of forgery, fraud, duress, incompetency, incapacity, and impersonation. So let's really think about this. Let's go over that again. They all have coverage for forgery, fraud, duress, incompetency, incapacity, or impersonation. That's a lot. And when I read that, I hear that is a lot of coverage, because we're talking about very different things. Now, forgery, if someone's forging a signature, we know what that is. And forgery is a felony, by the way, but people still do that on occasion. Fraud, if it's a straight up criminal selling the property that they don't own. And there have been a lot of people in the newspaper in Southern California that have sold other people's properties pretending to be them, and they were not. Duress, and by the way, at the core of real estate, we know there's a lot of money moving. Your title insurance companies have millions of dollars coming and going every day from new lenders, from buyers' transactions. There's a lot of money involved in these transactions. And so we know that they are a target for real estate criminals. Now, under duress means that they're pressured to for some reason. And then incompetency. If someone's incompetent, they simply are incapacitated. Alzheimer's is a good example. They're incapacitated, or if somebody else impersonates them, in the case of a real estate criminal impersonation, maybe they have a fake ID. We have had some criminals that had fake IDs created and said they were the homeowners for vacant property and sold other people's property. So impersonation, they would be covered for any of those sorts of things. And then item number, let's cover 7 and 8, because those are additional coverages that they all three have. Item 7, if there's a lien on the property due to a previous deed of trust. Now, I mentioned that briefly earlier. Let's get into that a little bit. If there is a lien on the buyer's property, a deed of trust that was not considered, wasn't cleared when we closed the transaction, and now that lender is starting foreclosure, would they be protected? Yes, absolutely, the buyer would be protected, and so would the lender. If there was a lender that was issued a policy, they would be protected. And this is a really, really common issue, so I like to touch base on it. Our sellers often, again, have multiple loans during the time that they own the property. Refinances, you know, the rates get lowered, and people will refinance sometimes multiple times, 5, 6, 7, 8 times, maybe if they own the property 20 years. What happens is creditors, lenders, when they record their deeds of trust, wanting to make sure they have the lien position asserted by recording their loans, showing the public, they often, when they get paid off, it's very, very common that they do not issue a release and get that lien off the record, so it looks like they're still open. So what happens is if a seller goes to sell property and they have a couple of loans that they paid off, but the lender never released them, we have to determine, is that a live loan or is it not? Is it truly paid in full? Is it a credit line that's paid and closed? Or is it a live loan that could ultimately trigger foreclosure? So we have to be cautious with those. We'll always ask the sellers if they say that there's an old loan that's been paid, please look for records and see if they have any proof. By the way, oftentimes if a lender's paid in full, they will send a letter to their borrower saying, thank you for your business, your loan is paid in full. But many times I have seen where a lender paid or sent the actual homeowner, their borrower, the release, the reconveyance to record themselves. So they'll send the original live release document to the homeowner and they have no idea what to do with it. They have no idea the importance of getting it recorded as well so the public can see its release. So just heads up to you on that. If we ever ask about old loans and for the seller to provide proof, that's what we're looking for. We want to assess the situation as best as possible, limit everyone's exposure and make sure those loans are really paid because it is so significant. They can foreclose out a new buyer and a new lender. So we're always considering that. Now, having said that, as a title officer, I would get a call every day, no exaggeration, every day to eliminate a seller's old deed of trust if they paid in full, lender hadn't released. It's that common. Often we can do it based on risk assessment and maybe the seller has something to provide to us. We often do that. We'll take them out depending on the situation, but we really want to see if we can release recorded at some point. Escrow will often participate in those, request a reconveyance or a zero demand from those lenders, but we should start talking about those as early as possible if we see one. Now, the last of the 5 that they all have in conjunction, they all 5 have coverage, would be item number 11. That's down here, item 11. The title is unmarketable. What does that mean? Title is unmarketable. What that means is if for any reason our insured owner goes to sell the property and they can't sell it, it's not sellable due to a defect in the title, that is covered. We will cover that sort of a loss as well, or that sort of a compromise to the seller, our insured, that will be covered as well. So all 3 of the policies have that coverage in common. Now I'm going to touch base really quickly on the Alta Residential, that second row. Item number 12 is something that the CLTA does not have, but the ALTA Residential and the ALTA Homeowners Policy do have. So again, that's item number 12, which is, let me scroll up and we can take a look at that one. Excuse me, let me check that. Now, item number 12 is mechanics liens, So unrecorded mechanics lien protection for work contracted by the seller. Now, some of you may have heard us talk about a loss of priority. That is when a contractor or their workers are on site, they're making either a repair to the property or a full-blown new home construction. It could be as simple as adding on a room even. Anytime we have material men on site at the property and they're making an improvement, they have rights. And if they're making improvements prior to selling, particularly if they're substantial, again, like adding on a room or a complete remodel, substantial where there's a lot of liability there, they maybe do a lot of money for that work that they've been doing. If they record a mechanics lien, or if they even begin the work but haven't completed it and they have money due them, that will be covered if ultimately there is a loss and the buyer is threatened with any kind of lien against the property from a seller's contractor. So that would be coverage, mechanics lien coverage, unrecorded mechanics lien protection for work contracted by the seller. That would be covered. Now that's in the case of the Alta residential and the Alta homeowners, but not in the case of the CLTA, that's not covered. Now I wanted to hop down to item number 24. Item number 24 here, item number 24, building permit violations. You notice the last row is checked. That's the Alta homeowners policy. So building permit violations. The other policies, the CLTA, the Alta residential, they don't cover building permit violations, but the Alta homeowners does. There's a violation in permitting issues relating to the property that could be covered by your title insurance as well. And by the way, everyone, please keep in mind, not only do we in title insurance, we have our customer service, we have our underwriting division, you have your title units in the office that are actually ensuring the transactions, but we have a claims division. And if you ever have a buyer that has a concern about potentially having a loss, they can submit, they are our insured, they can submit a claim letter like you would to any other insurance company. We'll get them with our claims division and have them assess it and communicate with your homeowner. So absolutely know that that's there for them. Please reach out. We'll make sure to connect them. Now, I wanted to move on to what is a preliminary report. I just wanted to touch base on this, and then we're going to talk a little bit about binders, because I want to give you a couple of takeaways as agent, things to think about in the future, a couple of tips to share with your sellers and a way to protect them. So preliminary report, I touched on earlier, that's a more extensive report than the profile. It is referring to easements, taxes against HMRs. Review that as early as possible, or let's do that with you. We can troubleshoot those for you early. The earlier, the better. If the client has, for example, a homeowners association lien, we can discuss that early, make sure that escrow orders the demand. But the things that I would be more concerned about, and I just wanted to touch on these, are issues like solar liens, hero contracts. Modern issue that we have today, and we have it in Orange County for sure, is that we have homeowners now that have solar panels. Those solar panels come with contracts and liens that are reported against the property. Also, we have that HERO loan program. I don't know if you're all familiar. The HERO loan program is a home energy renovation opportunity program. It is a loan that is made just for home improvements relating to conservation of green energy or electricity. HERO loan program, as well, if a seller ever mentions that they have one, let's start talking about that early. We want to make sure that you price the house correctly if they have it, because all the money that they borrow in the HERO loan program goes back into the property. It's not like a second where they could buy a car with it. They have to put that money back into the property for home energy conservation or water conservation, which could mean double pane windows. It could mean solar panels. It could mean insulation, many other things. And so those improvements you want to discuss with them early, make sure if they have a HERO loan, you find out what those improvements are so you price the house correctly, because the seller will have to pay off, they will have to pay out of the proceeds, any money due for solar liens, HERO loans, that sort of thing as well. And that will be shown in a prelim. So we definitely want to try to catch those as early as possible. Lisa, anything you want to add before I go on to binders?
No, I don't have anything right now.
Okay, great. So another thing that we wanted to touch base on right now is the fact that we have what's been lifted recently is the CARES Act. During the last year and a half relating to coronavirus, there was put into place the CARES Act, Coronavirus Aid Relief. It's a forbearance loan program that millions of homeowners, millions, 4 million, the first 60 days that this Protection Act was put into place a year and a half ago, over 4 million within 60 days applied, and millions have applied since for loan forbearance protection. This program allowed for homeowners to keep their property, not be foreclosed on, and to put off their loan payments. Forbearance is what it's called. It's not forgiveness, it was forbearance, which means at some point they were going to have to be paying those. That protection has been lifted now, and the articles I've been reading about it tell us that we may see more properties being sold because people need to downsize. They can't afford either the higher payments with this loan forbearance or to bring those payments current. We may see people downsizing. We may see people that end up in default, that end up in foreclosure. We may have in the next year, if rates go up a little bit, it's too soon to tell, we're making history right now, but we may see many investors jumping into the market like 2008, 9, 10, 11. We had a lot of investors jumping into the market when we had some short selling then, and we had our lending crisis then. Right now, rates are historically low. When we have historical things happen, we also have a counterpart, so we may see a little bit of changes in our market over the next year or two. And so for that reason, it's good for us all to know that if you have an investor who's buying property and they don't plan on keeping the property for very long, let's say 2 years, if they want to buy a property to improve and sell, hold on to for a short time and sell, they can buy what's called a binder. So remember early on I said that the seller in California pays for the buyer's title policy when there's a real estate transaction. Well, the buyer can buy for themselves for an additional 10%. They can buy what's called a binder. What a binder is a commitment from the title insurance company to give to them a policy when they sell at a highly lowered rate. So let's say a buyer buys today for $1 million. And let's say they sell, for $1.2 million a year from now. They will only have to pay title insurance on the additional amount over what they bought for. So if they bought for $1 million, they sell for $1.2 million, they only have to pay title insurance on the $200,000 increase, which is significant. So they're saving, they're paying 1/6 of what it would have been. They can literally save thousands of dollars in this case. So any of you that have investors that are hopping in at some point, or people that will be buying and not holding property for very long, 2 years or 3 years, we can extend it if they purchase with another 10% after 2 years, an extension. They can certainly extend it to 3 years. And again, it can save them thousands of dollars. Really good for investors, really good for people that are buying multiple properties and not holding on to them, selling them pretty fast, and save them thousands of dollars. So keep that in mind for your buyers that are investors. This as well is in our buyer and seller guide. Again, that buyer and seller guide is chocked with so full of so many things that can be beneficial. New agents read it, veteran agents read through it too, and just kind of get familiar with what's in there for your buyers and sellers. Lisa?
Yeah, I wanted, before it gets too late, I want to open it up really quick for anybody who has questions, or anybody that has anything interesting that they want to talk about, or anything about this presentation. I want to open it up to you guys.
Lisa, it's Jack.
Hi, Jack.
Hi, real quick, Tracy, could you explain this new cottage industry that popped up, this title lock trip, and just explain what that's all about, what their system is, or what it's all about?
I heard about half that question. Please repeat it.
Can you explain the new cottage industry that's popped up that's called title lock? We hear it advertised all the time. It's in regards to people that they claim that title insurance doesn't protect you, et cetera, and I know you covered a lot of things that Karen talked about the transition between people on the deeds.
So I think I hear what you're saying, and I've been familiar with this for probably 3 or 4 years now. I've been hearing about this maybe longer. Title lock. There are companies that advertise to protect your property. And ultimately, they are not, as far as I know, they are not going to pay a claim if you have a loss. They are not doing that. They're in the business to let you know if something's been recorded on your property recently that you weren't aware of. I think that's their primary sale tool, is that they offer to check your property. And I don't know that they're doing a whole lot more than that. That's not my expertise. That's not my industry, but I have heard of them. And I know ultimately they are not an insurance company. They are not actually insuring the property, that there will be no loss, or that they will protect if there's a loss. That's title insurance. That's what we actually do. And then again, when property's transferring, we're checking for anything relating to a potential, what could be a potential loss, and hopefully mitigating those prior to close. Now, post-closing, if you have something that records on your property, let's say somebody wants to, let's use an extreme scenario. Maybe they report out, maybe this title lock company reports to you, oh, there's a deed that got recorded on your property and the property's been sold, but you didn't do it, somebody else did. Are they going to protect them then? No, I don't believe they are. I think they're going to bring it to their attention, but I think ultimately they're not offering insurance in that case. And I could be wrong. If anybody knows more about it, please add to the conversation. But I think what they're doing is bringing it to their attention. Ultimately, if you had a loss, depending on the scenario, that would be something you might submit to title insurance to see if our claims division would cover something like that. So depending on what the issue is, they're bringing it to their attention, but are they protecting them from it? Are they truly locking the property from anything happening? They really can't do that. As I mentioned earlier, we can walk into the Hall of Records, and I don't want to be too casual about this, but this is the truth of the matter. You can walk into the Hall of Records with a document typed, and especially if you had a fake ID, you could record something on someone else's property. And title lock is not going to prevent that from happening. The Hall of Records records, title lock doesn't. We can't even see the public record. Keep in mind, everybody, I don't know if you all know this, but if a document's getting recorded today at the Hall of Records, LA and Orange County, they record thousands of documents every day. In LA County, there was a point where we were heavy volume. We were recording 5, 6, 7,000 in a day. The Hall of Records, when they record those documents, they have to then photograph every one of those documents and to show the public, right? So it's a long process. And if somebody records today, we may not even see it for 5, 6, 7, 8, 10 days, depending on how far behind they are. And that changes a lot. I know Lisa's familiar with that too. Yes, Lisa?
Wanted to interject because I do get that question a lot, Jack. I did speak with Dave Schumacher, who's our senior underwriter, and I put some information together on that, but I wanted just to let you know that if you are concerned about the integrity of your property or any property, just call me or call customer service and we will check it for you. And that's what Title Lock and companies like that are doing. They're just charging you a fee for it, and I won't, obviously. So they're just checking to see if anything's been recorded on your property, but they're not protecting you in any way, nothing more than what we can do. So if you do have any concerns, let me know and we will check it for you free of charge.
Yeah, absolutely. And so that's available to any of you 24/7. In our app, we have information that's available regarding what's been recorded, but also our customer service division. And like Lisa said, we have access to the records at all times. We can't see a document that's been recorded for up to a week or 10 days. None of us can. The public can't see those documents for a little while. But once they're available to us, we've always offered that to our clients free. It's just part of doing business with you. So I think ultimately that's what we're really talking about, and I appreciate the question. I think it's a really good question. I'd like to go ahead and recap. Does anyone have any questions before I recap? Please join in if anyone has any questions. Lisa, anything you want to add, feel free to do that.
Go ahead. Okay. In the event that someone calls you and they ask you to run a check on a deed, and you find that there's a deed, another lien put on that house, what's the next step for that?
Well, the next step is to determine if it's fraudulent or not. I have had scenarios, certainly where I've seen loans get recorded against properties. Ultimately, whether it's a title insurance claim or not, if it's not, then they would have to get an attorney involved to have, ultimately, if it's a deed of trust that we're talking about, it would have to be set aside. It would have to be removed if it was fraud. So,
okay, because the big fear is that someone will lose their home. A fraudulent sale will take place. They'll be removed from record, and the new person will be on record, and they'll just be without their house. Is that really how it works?
So a forged document ultimately could be set aside through the court system. I have seen that happen on a number of occasions. I actually just saw one yesterday. I was working for a few hours with something similar to that. So if somebody recorded a fraudulent document on your property, if it was a deed to transfer title or if it was a loan against the property, and it was fraudulent, they could be stopped. Ultimately, a court order could be issued to set aside the grant deed or to set aside or void the deed of trust, so it would have no effect. It could be ignored. Ultimately, if there was a future sale, the seller could move on without any further, issues relating to those criminals or to those fraudulent transactions. So yeah, is our property vulnerable to having something recorded against it? Absolutely. And again, you know, that can't be prevented because anyone can walk into the Hall of Records and record a document. Anyone can do that. And on occasion, it could just have a bad legal description end up on your property because it had incorrect legal description. I've seen that happen as well. So things like that do happen. Lisa, go right ahead.
Right. To answer that question a little bit more, I did ask Dave Schumacher that as well, and he specifically said that is what title insurance is for, and that would be covered. So I guess at that point, we would run it by our underwriter, and then they would make the decision on how they would cover that. But that is what title insurance is for.
Right. Yeah. Thank you, Lisa, for adding that. And as I said earlier, if there's ever potentially a claim to the property, we would submit that to our claims division, and they would reply back either that it's a covered issue or that it's not, and they would interact directly with the client. So what you can do is put the client in contact with us. We would then in turn, and you can do that through Lisa or through the title unit that they were insured from. We would then in turn connect them to our claims division, and they would start interacting directly with the client. So be rest assured that they would be there to do that as well. So any other questions? Does that answer your question?
Yes, thank you.
You're welcome, absolutely. So right now we gave a kind of a broader view, I think, of everything, including the Hall of Records, which was my goal, to really give you some insight as to what's happening behind the scenes, what's happening at the Hall of Records, why we have some concerns that we have, and how we proact and address issues as early as possible so you have smoother closings. The smoother your closing, the more referral business that you will have. And just knowing that the strength in a good business partner and your title insurance company can go a long ways. And we do appreciate being able to connect with you and bring you this information. And we hope that today, right now, you know, a little bit more than when I started, that was the goal. You don't have to be an expert at these things, but to have some good, strong basics, that's really the goal today. So you feel comfortable with it, you feel confident with it, and you know what's available to you. And of course, Lisa is available for information if you need it, and as well that buyer and seller guide if you need that. So thank you for having me today to be able to connect. And Lisa, go right ahead, wrap up.
Thank you again, Tracy, for helping me and training these super important agents. I really appreciate it. Nikki, do you have anything that you want to say? I just want to say
Lisa, actually, I want to thank you for the lunch and for all the information you give. You guys are amazing. So I'm not even looking at you. I really appreciate that. Thank you.
You're welcome. It's my pleasure. Thank you guys all.